Okay, so let's talk about the Indian Rupee. Because right now, something wild is happening. It's flirting with 90, sometimes even pushing past 91 to the US dollar. That's a fresh all-time low, and that's pretty bonkers. You see it everywhere. People asking, is this a crisis? Is India's economy just collapsing? Or, and here's the kicker, is this actually part of some incredibly calculated, almost surgical strategy? Because let's be real, a currency dropping like a stone usually screams trouble. But India's economy is actually pretty strong right now. Growth is up, inflation contained. So what gives? Why is the rupee taking such a beating, becoming the weakest currency in Asia, literally? There are a few big pieces to this puzzle, and honestly, it gets kind of messy when you dig into it. First up, and this is a massive one, is the sheer stuff being pulled out of Indian markets by foreign investors. We're talking foreign institutional investors, FIIs, also called foreign portfolio investors. These are the big players, the ones who pour billions into a country's stocks and bonds, and they're bailing hard. They pulled out something like $2.7 billion in just the first 2 weeks of December 2025. 2 weeks! That's already one of the largest monthly outflows this entire year, and the month isn't even over. And get this, they've been selling off since July 2025. You want to know why? Because that's when the former US President, Donald Trump, started slapping tariffs on Indian businesses in the US market. We're talking a 50% tariff. 50%! And those tariffs? Yeah, they're still there. That's a huge, glaring red flag for any foreign investor. It makes Indian exports less competitive, and it just sours the whole sentiment around investing in India. So you've got these FIIs pulling their money out because of these tariffs and the general trade war environment. And when that much US dollar leaves a country, it creates an imbalance. Simple supply and demand, really. More rupees chasing fewer dollars, and bam, the rupee loses value. It's not rocket science, but it hits hard. Then there's the bigger picture, the whole global macro backdrop. The US dollar, it's just been structurally strong. You see it. In times of global uncertainty, money tends to rush to safety, and the US dollar is often seen as the ultimate safe haven. That creates a gravitational pull, sucking value away from other currencies, especially those in emerging markets like India. The Indian rupee has weakened against almost all other major Asian currencies, except maybe the Japanese yen and Korean won, which have their own domestic policy challenges. But wait, there's more. India's trade deficit. This is where things get really interesting from an economic standpoint. Back in October 2025, India hit a record-high merchandise trade deficit of $41.7 billion. That's because exports are kind of weak and imports are still rising. When a country imports way more than it exports, it means more local currency is leaving the country to pay for those imports. More demand for foreign currency, less demand for the domestic one. And guess what? The rupee slides further. Experts are even predicting India's current account deficit could widen significantly in FY26. Now, all this paints a picture of a currency under severe pressure, and usually a government, or rather its central bank, in India's case the RBI, the Reserve Bank of India, would jump in, right? They'd sell off their stash of US dollars to buy rupees, trying to prop up its value, and they have done that sometimes. We saw some aggressive US dollar selling by the RBI recently, and the rupee actually roared back, gaining over 1% in a day, which is pretty significant. But here's the thing, and this is where the controlled depreciation idea really comes into play. The RBI hasn't been going full throttle. Their intervention has been, let's say, relatively limited. Their stated position isn't to defend a specific rupee level, it's to curb volatility. That's a subtle but crucial distinction. And some experts, like Ananya Banerjee from Kotak Securities, they're saying this limited intervention, it appears deliberate. Think about it. India has strong economic growth, inflation is pretty well contained, so if your currency depreciates a bit, what does that do? It makes your exports cheaper for other countries to buy. Suddenly, Indian goods look like a better deal globally. In a world riddled with trade wars and protectionism, like the one we're in with those Trump tariffs, a weaker currency can be a massive leg up for export competitiveness. It's like a secret weapon in an economic battle. So is the government failing to keep the value up, or are they, with the RBI, strategically letting it slide? It's a fascinating question, isn't it? Because if you have strong fundamentals, which India largely does, then a weaker currency might not be a sign of catastrophe. It could actually be a calculated move to boost manufacturing, to make India an even more attractive place for global businesses to source from. The political and geo-economic history behind this is, frankly, still unfolding. We've got this uncertainty around the India-US trade deal. Negotiations have been dragging on throughout 2025. A finalized trade deal, according to experts, would significantly ease the pressure on the rupee. It would signal a return to some semblance of normalcy, potentially reversing those foreign outflows. But until then, it's this big question mark hanging over everything. And those lingering Trump tariffs, they're a huge part of this current geo-economic tension, almost a constant drain on Indian export potential and investor sentiment. Ultimately, the rupee's trajectory is a complex dance between global dollar strength, persistent capital outflows driven by trade tensions, and the RBI's strategic choices. It's not just a number on a screen, it's a reflection of geopolitical maneuvering, economic strategy, and the everyday reality for millions. It's a pretty wild ride to watch, and a stark reminder of how interconnected the global economy truly is. If you found this breakdown even a little bit illuminating, do the thing, like, and hey, maybe even hit that subscribe button. We've got more of this kind of stuff coming.